What's up, guys? Tyler here. I'm coming on and taking over AK's channel for a day to talk about BYND, Beyond Meat. We've seen this thing freaking skyrocket from, I don't know, I think it IPO'd around 70 bucks around there. Let me check it out real quick. BYND. Yeah, it was down at 60, 70 bucks, went all the way up to 240 bucks. And lots of people are trying to short it because it's overvalued. And I want to get into why it's actually not smart to short these things as soon as they pop up and there's a bunch of buzz around them. You actually want to wait for the buzz to die off and then get in. So it's more about the timing and less about the price on these things. I'm gonna show you guys why. Now, before I get into it, you can get the Value Ventures Checklist, a free download, and that is created by one of our partners at MacroOps called Mr. Bean. He's just a badass value dude, and this is what he uses to assess every single value stock that he gets in. So if you're interested in checking out exactly what he looks at, if you're into value stocks, head on to the link in the description. Go check that thing out, read it, let us know if it helped you out. So anyway, let's jump in. Now, I put this tweet out July 30th, last week sometime, and I wrote, BYND will be an epic short, but not now. And that's because option IVs are way too high to get short with puts, and the range makes it hard to control risk. Better to wait until the stock breaks upper momentum and the range starts to compress. And I have this little chart here, and you can see BYND, we're up here now in the 120 to 240 range, just chopping around like crazy. And what I'm saying is, once this thing breaks trend, and once it breaks a new swing low, you're gonna see the volatility on the price bars compress, option premiums are gonna go down, and it's gonna be a much, much easier trade. And so a good example of this was GoPro. And so GoPro is the same thing. This comes out, it's some hot product that everyone's using, everyone likes it, and it skyrockets out of control. We get this huge run from 40 almost up to 100, and then we have this large volatile range here. And this is back in 2015, guys. And then you can see once it finally broke the swing low, we had this compressed volatility with smooth downtrend. So if you're looking to actually get short, what you want is a nice downtrend with not a lot of snapbacks, right? Because then you don't worry about all that crap sitting in the tray like, oh, is it going against me? Is it going to break out again? You don't have to spaz out about that. You could just get short and easily ride the thing because it's a nice trend without many snapbacks. You could see when GoPro broke down here, it just smoothly downtrended and you had a smooth ride as a short. So I'm going to go through a few reasons why this occurs on these hot, fresh IPOs, why they get so volatile, and why trying to short them out of the gate just because the price is high is actually a really bad idea. We see so many people get in there, they're super eager, like, BYND's, 80x overvalued, and they try to short it, then they just get their heads ripped off because they don't realize that the market is not trading at all on fundamentals. It's trading on sentiment, and it's trading on other important things like borrow costs and float. So let's dig down into the details. Now, first, let's go into the option pricing. I want to show you guys something. So I pull up my Thinkorswim. We typed in BYND here, and you can see, let's look at the Jan 20 calls and puts. The calls are trading for about 20 bucks. So you can buy a Jan 170 call for around 20, but look how damn expensive the puts are. The puts are almost between 48 and 50 bucks if you want to pick up a BYND put. Now, on most stocks, these prices should be the same. So for example, let's type in Apple. Let's look at their Jan 20 at the monies. And you can see, the price is generally the same. And this is what it should be. The at the money call and the at the money put should be about the same price. But for BYND, it's not. And that's because borrowing costs to get short the stock are incredibly high. So if you go out and buy a put, that means a market maker has to sell that put to you. And then when they sell a put to hedge their position, they short. So there's a lot of people that need to be shorting into this market to cover the put demand. And what happens is when there's a lot of people like that, you get skyrocketing borrow costs. So I want to bring you guys over to this website called iBorrowDesk. And you can see that the borrowing costs, the most updated one on 8.2 was 372% annualized. And this has oscillated around a lot, but 372% is ridiculous. Even 100% is ridiculous. So it's extremely costly to hold shares short of BYND right now. And that's because the supply, the public float is extremely tiny. And when you have a very, very tiny float, then you get an extremely large borrowing cost, which makes it extremely hard for market makers to hedge their positions, which is why you get those huge put prices, and then the cycle continues with these hot IPOs. So not only do you have this large sentiment, you have these kind of technical factors with the way the float's constructed that makes the shares extremely tough to hold on to in short, and those cause just short squeezes and everything beyond that. So I want to dig down now into this float concept just so you guys understand that a little bit better. And what a float is essentially it's the amount of shares that are available for the public to trade. And when a company IPOs, they don't sell all of their shares. They usually sell a certain percentage of them to the public that can then go on the markets. And so I went and did a little digging. If you look at the SEC filing, the Form S-1, this was the one that came out when they were doing their IPO. And essentially, we don't have to go read all of this. We just need to see that they're basically trying to offer 9.6 million shares. So that's actually not that many shares either for a large company. 9.6 million, there's the floats of things like Apple are much higher. And let me see if I can pull an Apple float up for you guys. Let's go to Apple and let's see, they got float on here. All right, they don't got float on TradingView, but it's fine. The Apple float, they can get into the 100 millions. So actually, no, I have another source. I can check it real quick. AAPL, look at this. All right, so I'm on FinViz and I see the float actually 4.5 billion on Apple. So that's a huge float and there's tons of shares available to trade on Apple. So BYND, when it first IPO'd, that actually started at a 9.6 million share float. So immediately, that's going to make short supply extremely tough to come around. And we already saw this thing trading. Let's see the volume, 2.9 million, 8 million, 8 million, 23 million on June 7th, 24 million. Now it's trading, 16 million to 10 million a day. And so it's basically rotating the entire float over per day. And that's a huge problem because that means there's so much more demand than there is supply out there, right? So if the float's only 9.6 million, it's trading 10 million shares a day. Way more people want to own the stock than there's actually out there available for trading. So what happens is when you get this is you get those super skyrocketing borrow costs, and that translates down into the options, and that translates down into the borrow fees, which makes it just an extremely tough short. So why fight all these factors? Why fight the sentiment? Why fight the high borrowing costs? Why fight the trend? I can go on and on and on and on about all these reasons why to not short BYND right now. And again, the price of the damn thing doesn't really matter. You'd rather short something at 100 that has an easy ride down to 80 than say short something at 200 that's going to be all choppy and rolling around and hard to control risk on. And so another guy that's picking up on this exact same concept that I'm talking about was a gentleman by the name of, let's see here, Mox Reports. And I'm going to bring up this article for you guys so you can see it. But essentially, he's going through this and telling you why put options are fueling the Beyond Meat mega squeeze. And so he goes in and say, these are the veggie burgers, and the stock's gone from $70 to overvalued at 170, and now it's closing at 222, blah, blah, blah. We all know the thing's overvalued, but the problem is the float. And because the float is very, very small, we're getting those extreme short squeezes. And the example that he gives is Tilray, which was a marijuana stock from last year. And let me show you guys that one on TradingView here. So boom, the exact same thing. We had an IPO here down at 23. This thing squeezed to 300. Actually, an absolutely ridiculous squeeze because the float was so low and shares were incredibly hard to short and people were getting bought in and shorts were getting squeezed. And so it was an extremely hard trade to the short side. But then once all those factors wore off, let's say, about 6 months later, look how easy of a trend it was. So if you were to actually wait for all this crap to die off over here and just get short, you had a very nice, easy trade from around $100 all the way down to 44. That's a 50% return on a short in about 6 months time. And so he goes on to explain why, like I'm telling you guys, to wait for these things to kind of cool off and let the float increase as well. So they both had their IPOs, they both had small floats. He talks about the borrowing costs here. The borrowing cost is out of control. And then he's saying that the standard put buy and Beyond Meat is causing many people to get in, drive borrowing costs up, and then have the stock squeeze even higher. And so he goes in, he talks about why, the market makers can exacerbate the squeeze because like I said before, when buying puts on these low float, hard to borrow stocks, the put buyer is forcing the shares higher because the market maker who sold the puts is exposed to now downside moves in the stock. So he hedges it by shorting common stock. And so essentially you get an additional source of short interest created and it makes the problem even worse. So what he's saying is, wait, And that's what I'm telling you guys, because what's going to happen is BYND is going to start releasing more shares on the market. That float's going to increase. And actually, if you look at another recent S1 they filed, and I'm on BAM SEC, I found this one. This one happened on July 31st, 2019, and they actually offered another 3.7 million shares. So the float's increasing. It started at 9.6, now it's going to go 12. And because their damn stock price is so high, these executives are going to look at it and be like, damn, we got to cash out on this thing now, because they have such high prices. They can sell more shares to the market high prices and put themselves in a much better financial situation because they can raise a ton of money. So they're going to continue to do that. And on top of that, what this Mox guy says is the lockup is going to expire. And this is common in all IPOs. So whenever a company has an IPO, there's usually a standard 100-day lockup, which means that insiders and people of the company cannot sell their shares until 180 days after. And that's kind of to guarantee the success of the IPO, because a lot of these insiders and employees and people that have stock and been in the company for a while, they really want to cash out. They want to get out. They want to get some of their money, diversify their risk. But if you allow everyone to do that on IPO day, it could tank the stock, and it's just not a good look for the company. So they always have a lockup period to prevent people from doing that. So what's going to happen is, as this thing plays out, we are going to see a complete trend change. I think it's going to play out like Tilray or GoPro, where we're going to have, after these huge high spikes and these volatile ranges, that lockup period is going to expire. So you're going to have more people, insiders, coming to sell their shares in the market. You're going to have the float increase because the company's going to be doing a lot of offerings to get to do some fundraising at very, very high and favorable prices. And then the sentiment's going to wear down. That borrowing cost is going to go way down. So the puts aren't going to be nearly as expensive compared to the calls. They're going to be at the same price as the at the money calls. So you're going to be able to get short easier that way. And then you can see whenever these things die out and the sentiment kind of turns the other way, it's just so much easier, guys. Like I never understood why people want to short these stocks that are absolutely skyrocketing and deal with all these oscillations. I mean, look at BYND again right here. So if I pull up BYND, look at all these things. We're spiking up, spiking down, spiking up, spiking down. Once this thing breaks trend and the sentiment cools off, it's going to be a way, way easier short. You're going to be able to ride that trend. It's going to be fine. You're going to have the fundamental factors at your back. You're going to have technical factors at your back. You're going to have the option prices at your back because the volatility is going to compress. They're going to be cheaper. You're not going to have all these borrowing issues. So I hope I got this point across to you guys that, it's going to be way, way, way easier to short this damn thing down the line. There's just absolutely no reason to get on the action now. And I know a ton of people are going to try to do it, and they're going to keep getting blown out. I'm going to keep laughing at them and keep posting this shit on Twitter until they get it. So hope you guys liked this video. And, before I go, I want to make sure you guys, again, if you're interested in value vesting, look at the description, get the link, and sign up for Mr. Bean's checklist. It's completely free. That's what we have on the docket this week. And so I hope you guys check that out. Hope you guys like this video. I'm going to be coming back onto the channel to do a lot more other things going forward, talking about some option stuff, talking about stuff, AK isn't the best at, and I'm more of an expert in. And, that's why we like to bring different experts onto the channel, right? So we have Chris is the systems dude, and, I can do options. And so we always want to bring our best of our best in our research firm to you guys. So hope you like this video. I'll see you guys soon. Have a good week.